Hmm. All right. Good morning. Good morning. Good morning. Got about 1 minute until the cash open on Tuesday, March 31st. In terms of news headlines for this morning, we got Chicago PMI at 9:45, and we got the JOLTS job openings at 10 o'clock this morning. So in an environment where we really don't engage the markets until 9:45, it's very likely that we're going to hold off on any trades until after the volatility settles down, after the JOLTS job openings at 10 o'clock this morning. Don't really want to be engaged in the market before that because this is the first economic news release of the week. Most large institutions will not take positions until this news event comes out. We saw yesterday morning at the open, rotations were very slow. A lot of volume was not being added into the markets. So we'll see how today develops. So pretty good rotations here at the open. We're opening above yesterday's value area. But the name of the game today is let's just be patient. Let's wait for out of volume or out of value trades. On reduced volume, reduced speed in the rotations. Hopefully we get the absorption at our backs and we can get a good trade in today. But no pressure to trade. We let the market do what it's going to do and dictate to us where the trades are. We're not going to impose our will and our feelings upon this market. And we saw over the last few days, like the sellers have just been pretty relentless over this past week. Anytime the buyers bid it up, sellers are willing to absorb those prices and then push prices lower. But we've got a pretty big gap in the open this morning. Yeah, we're right up towards the top of yesterday's opening drive range. And already you're starting to see some slowdown in the rotation, slow down the speed up here at 6463. All right, if price was really accepting this area, these rotations would be a lot faster and there'd be a lot more volume being built. In terms of volume within the first minute, 15,000 contracts transacted, it's pretty good. But on the subsequent 1 minute, we're slowing down a little bit. This is generally not how fast S&Ps like to transact. They like to transact a little bit faster. So let's just be patient. Again, news events at 9:45 and 10 o'clock this morning. No pressure to trade. We're going to wait until the volatility of those news releases dies down, and then we can be willing to engage the market. but I can already from these rotations and this volume build here at the open, we're not going to stay here. We're going to move out of this area, and we'll see if we pick up volume. So extending the range to the downside now. Rotations are not all that quick. Not building a ton of volume down here. So it doesn't look like the market's going to break down just yet, if at all. These are slow rotations, slow volume builds into the lows. Yeah, you're extending the range. But is it going to be a complete breakdown trend day? Not from what we're seeing here with these rotations in this volume. It's just not going to happen. Right, if the market was interested in breaking down, it would get down to the lowest distribution and start rotating very fast and add a lot of volume and then snap down. All right, that's when you get a good indication as to when trend days occur and when trend days do not occur. This right here looks to be a balanced range, but this can also be kind of expected for a Tuesday morning with news releases at 9:45 and 10 o'clock that you're just not going to get a lot of action before then. So we'll be patient until 9:45 and 10 o'clock and see what happens with the rotations then. We're not going to really read too much into this. We got to allow the market to dictate what it wants to do, and then we just follow along. Right? We don't have any bias going in today. We're not looking for just longs. We're not just looking for shorts. Right? We're letting the market tell us what it wants to do, and then we're waiting for high probability spots to enter a trade with good risk to reward parameters. Don't overthink it. Execute cleanly and precisely. That's the name of the game. We don't care about our wins or our losses. We care about execution and precision. Right? Are we executing on our edge? Are we letting the trades go by? Are we panicking? All right, those are things that we base our day off of, not wins and losses, not the P&L. Profit is always preferable, but not always achievable. So there's rotations up towards the highs, also slow. All right, this doesn't really seem, this range right now that we've developed between 465 and 451, roughly, doesn't seem like a sustainable range for the market. These rotations are pretty slow. The volume build is pretty slow here. You want to just jump in and be shorting things back into value? No. Do we want to be longing things back into value just yet? No. Right, you're probably going to prefer longs to shorts here just based off the shape of this distribution. If we're targeting value areas, which is 60%, 68% of the distribution here, like you want to be a good ways away from that. Like you want to be up here if you're targeting down here, right? Being down here or targeting up here. You don't want to be right here at 465 and then targeting this area at 462. Risk reward is going to be terrible for that trade. So you do find a little more excitement within value. That's to be expected. Value represents the area of greatest acceptance among participants. So you are getting a greater acceptance around here in the 462 range. With my water, so it's not in the way. And not a whole lot. Market is pretty steady. No one's really willing to come in, at least no big players willing to come in and just start moving the market just yet. Again, with the news releases at 9:45 and 10 o'clock, they're likely just waiting. Unless they feel like this is a good price for their book, then they'll transact. But large players are not going to take position trades until after the first news event of the week, usually. Unless it's like on Wednesday or Thursday. But when it's on Monday or Tuesday, they just wait for the news release and then they engage the market. And because they are the ones that move the market, we wait and we be patient. We allow them to move the market and we just tag along for the ride. All right, just in here with arms crossed, nothing to do at the moment. We're just sitting and waiting and being patient. See if anything out of the ordinary occurs. Hands off the mouse, hands off the keyboard. There's nothing really here to engage unless we want to move our screen. and make things a little more viewable. That's it. And I will apologize for any noises behind me. I have one of my windows open today. It's a pretty nice day here, at least a nice morning. It's supposed to get storms later here in Michigan. But the cars traveling down the road are pretty distracting to me. So that's why I got my headphones on this morning. Keep the noise levels down so I can keep my focus and not just be turning around every 2 seconds every time a car goes down the street. And just rotating here within value. Not a whole lot going on. We're not adding a ton of contracts per rotation here. This is very slow volume here. All right, this is not an area the market is going to stay at today. We'll expand this range for sure. The market is going to go look around for those areas of liquidity. And the faster the volume builds, the better liquidity there is. And the market will likely stay in those areas. It avoids areas with no liquidity and goes to the areas of liquidity. It's the name of the game. Institutions and funds have large books to be trading on, and they need a lot of volume to do that. So just rotating here outside of value. Again, nothing crazy going on just yet. It's 9:38. Just being patient. We're waiting. We see some sellers stepping in. They're absorbing the buys. Nothing too crazy yet. Just be patient, sit and wait and watch it develop. Yeah, market's not really willing to move just yet. Large participants are not willing to engage just yet. They're waiting. All right, and you see the flashes of divergence on the bid, so buyers are willing to step in here, but you also saw the flashes of divergence on the sell side, so sellers are also willing to step in, and you get that in value, right? There's absorption on both sides within value. So once you get outside of value and you start seeing that absorption, that's more telling. But anytime you're within the 68% value range, absorption on either side does not mean much. Do we think this is going to break out to the high side? No. Do we think it's going to break out to the downside? No, not yet. These rotations are a little too slow. You might extend the range. You can absolutely certainly extend the range by a few points, but am I looking for some massive breakout right here? No. All right, so you get the immediate jump up in the volume, right? These are the limit orders that were sitting here, right? So in the original rotation, you get the limit orders filled, but it's the subsequent rotations up, whether or not people step in to continue the market. And are they doing that right now? Doesn't look like it. Right? I mean, you're getting some volume being built on these rotations, but it's not super exciting. Right? You see divergence on the buy side. So buyers are willing to step in here, but they're not really getting very far with price. And so now you jumped up, you fill those limit orders, rotate back down, right? And you rotate back up. Anyone left? So you're only getting, you went from like 195 to 247 there at 468.50 roughly. That's not a ton of volume being built. And it's pretty slow. But I like the range of this distribution much better than I did yesterday, right? Because we were at the lows of the distribution for most of the morning, and the value range was right at the lows as well. We want larger areas out of value in which to trade, right? This is a good range to trade, and this is a good range to trade. If the value areas are pushing up against the highs or pushing up against the lows, it's very hard for you to take a short up here, and it's very hard for you to take a buy down here. But when you have out of value ranges that are this wide, it's much easier to take a trade. You have much more wiggle room to work with. Right? Because one of the big criterion that I have for placing trades is I want to be out of value and trading back into value. That's where the probabilities stack. And that's good trading. So we've had sellers step in, we've had buyers step in, and market really just is not going much of anywhere just yet. 9:42, we got 3 minutes until the Chicago PMI news release. We'll probably get a little jolt in the market. It's not a major news factor. right? There's more emphasis right now on jobs, right? Because the Fed, their dual mandate is inflation and employment, right? So they read into these jobs numbers. Any major surprise in the jobs number will move the market. Chicago PMI, major surprise. You'll get a quick jolt, but it shouldn't be anything too crazy. And just extend distribution. We're just moving higher, checking things out. We're seeing if we can find acceptance. It is worth noting, and one thing I was looking at this morning is we look at the distributions over the last several days here in the bottom left of your screens that we do have a gap in the RTH sessions just above 6,500. It really starts at 495 and then goes up to 521. Right? There is a chance that we check up there to see if there's any liquidity offered. All right, and we talked about yesterday this distribution from Monday filling in this area in value from Friday, and it kind of did that. Right? Looks like I lost my weekly distribution on here. Why is it not showing? There we go. So I changed over from the web-based platform to the actual installed platform, and in doing so, screwed up some of my settings and screwed up trade sizes for yesterday. Good thing I canceled that trade yesterday because I did not notice that it was just on one account. It traded a huge size on just one account rather than small sizes on across several accounts. So slow rotations here. Market coming back into value. Didn't find a lot of liquidity up here. The seller stepped in with a little bit of divergence. You guys can see that okay. Yep. Okay, looks okay. Pretty normalized distribution here. Look at this shape. This is a pretty good looking bell curve. Those are the best environments for our types of trades because we go out of value back into value. All right, we got a news release in about 20 seconds. Let's see what happens. We don't trade the news. We let the volatility die down after any news release before engaging the market. With Chicago PMI at 945 and the JOLTS number at 10, could you, sneak in a trade? You could, but because the news release at 10 is a jobs number, we're probably not going to. I mean, we have to have really compelling evidence. All right, so there's the juicing from the PMI. Let's see what the number is. Using financial juice, 52.8. Forecast was 55. That's much worse than expected. All right, and we're seeing a little juice up in the markets. All right, reduction in manufacturing. And you're getting to move up. And it's because the market wants the Fed to cut rates. But now we're coming back into this area where we saw some sellers step in. Okay. All right, you didn't get much. You got initial rotations up here, but on subsequent rotations, we're just not really adding a ton of volume, it doesn't look like. Right, these kind of rotations are slowing down. You're adding some volume. You might reach up here a little bit. Let's see what happens. Am I willing to engage it here just yet? I mean, I do see a good trade here down to 461. Right, we got sellers stepping in. The rotations are slowing down. Not adding a ton of volume up here. This is a bit jagged and broken up here. This might need some smoothing out first. We need to check to make sure there's no liquidity up here. Well, let's see if we extend the range. We extended the range a little bit. Still a very good wide out of value area to trade within. There's a little too much volume, I think, still being built here for us to really consider a short. All right, you're looking at in each subsequent rotation, how many contracts are you really adding? All right, and you want it, ideally, if you're shorting, you want to see not many contracts added on the rotations up, but contracts being added on the rotations down. 123 to 138 to 150. See, you're still getting a little too much here, right? But we're not dragging the value area high up just yet because we're not building enough volume up here, which is a good sign if you wanted to take this short. And you're kind of running out of room up here. All right, and then we're starting to smooth this curve out. It looks better on the TPO chart. You can see the smoothness of this line here. That's ideally what you want. And we're slowing down pretty good here. 947. Am I maybe willing to jump in here a little bit? 5394. Yeah, I think I'm willing to jump in here. We're just not adding a lot of volume up here. So I'm gonna put a sell at 6.4. Let's see where the rotations go. Let's do 6.476. See if we get a fill. Stop at 8.1. All right, we got filled. All right, my take profit is down. Let's do 465. Oops. So I hit the wrong button there, of course. We've moved over to the desktop application. All right. So we're short at 475.75. All right, we're trying to sneak one in before the news release at 10. So I'm gonna put this into my log. Trade 949. We're short at 6.475.175. Or sure, stop you at 850. Should be at 850. Stop at 850. 480.50. Oh my god, I keep hitting the wrong goddamn buttons. Oh, all right, stopped out. Yep, that happened quick. Okay, so let's get this log correct because we did a lot of fumbling of the buttons on this one. That was not great. So 475, we got out at 4.6 gold. That stopped at 40.50. Yep, okay. We didn't take a full loss because we screwed that up a little bit. And our take prop, make sure we don't have any orders in, down at 465. We're out of value. We're going to, we did have the difference flashing. Nope. Okay. All right. No, we got tricked on that one. That happens. All right, so we're just gonna be patient and wait till we re-engage. Not a great start for the morning, but it is what it is. All right. All right, so we got news, the JOLTS number coming out in 9 minutes. We're gonna be patient. We're gonna let that get out. We're not gonna try to sneak in any more trades here, I don't think. I mean, we had that slow down here, and the market just shot up through it. And buyers are stepping in higher, trying to hold this price up. All right, again, pretty good rotations here at the highs. Not bad. But once the JOLTS numbers come out, we'll get a much cleaner reading as to what's happening this morning. All right, I'm going to use this opportunity for the restroom break. Okay, and we're back. How do rotations look up here? Look pretty slow, but again, you got a news release in 7 minutes. So we're not going to engage this. Got buyers willing to come in and defend this low volume area here at 480. All right, they're going to continue to push the range higher. Is this a trended distribution? No, doesn't look like it. You're slowly adding to the range. All right, you're not on good trend days. You'll break the initial balance range, leave a low volume area, rotate very fast, add a lot of volume very quickly, build a very tight volume node very quickly, and then you'll do the same thing again. It'll break, leave a low volume area, and you're just not seeing that. Yeah, you left a low volume area here. You added some volume here, wasn't a ton. All right, I got to imagine the market's going to come back in and try to fill these areas in for liquidity. But the market is finding liquidity up here. All right, and we talked about maybe a test of the highs up here. This gap in the RTH sessions between 6,500 and call it 520. I don't know if that's going to be within our range today, but it might be. So let's just be patient. Let's wait for the jobs number to come out. We've already taken one swing this morning and we missed. So before we take another pitch, let's just make sure that it's a fastball up the center. Was that last one a fastball up the center? I mean, it was up the middle. It wasn't a fastball. It was a little bit of a curveball. All right, we're getting more flashes divergence on the buy side than you are on the sell side. All right, buyers are still willing to engage this market and lift prices up because when you do that, you're under the impression that prices aren't going to get lower for to give you a good fill. Right, these are people just buying because they think the market's just going to go higher. But doing that into a jolt job number in 5 minutes could be a trap. But we're not going to jump in and engage just yet. We're going to allow things to work themselves out a little bit. First trade was a little bit of a bummer. We were fumbling a little bit with our orders, and the market just shot up and took out our stop. Good thing our stop was there, right? Because I was just in like the middle of adjusting, and I saw the miscalculation. So you're getting some sellers stepping in up here at 493 area, holding prices down a little bit. We had flashes of the buyer divergence down at 488. See if they hold prices up here, but again, and when you fill these low volume areas, you want to see very quick rotations and a lot of volume build. That's when you know participation is being accepted. All right. Yeah, I got to imagine we'll be back down here soon enough. Back down the 480 range. This just isn't it's super exciting. Market's not very excited about taking prices all the way up here. Jobs number in 3 minutes. Jolts jobs in 3 minutes. No other news headlines coming across on financial juice. So looking pretty good at the moment. Oh, you guys can't see this. No. All right, this keeps track of the divergence. It's also a 1 minute chart, but it's zoomed out to see what like the kind of the trend of the market is, where the areas of divergence are. So we're hanging up here in this previous area of liquidity around 484. All right, the market will stay here until it runs out of participation. Sellers are willing to step in here. Again, we got a news event, right? We saw the seller step in here. This is probably a good trade, right, on the slow down rotations and slow volume build. But again, we're so close to the news release, you don't want to take that trade. Just let it pass. It's a low probability going into the news. News can just shoot it any which way. There's going to be a lot of algorithms reacting to the news release, so we don't want to get in their way. All right, you're finding liquidity in these low volume areas. You're able to build some volume. All right, that lends credence to the idea that this is going to be a normal distribution shape and not any sort of trend day. On trend day, low volume areas do not get filled. All right, and you're kind of struggling here a little bit to fill in this area. It doesn't look like there's just a ton of liquidity up here. All right, maybe the sellers are just backing off a little bit, letting the buyers raise the price until the sellers feel that they're getting a good offer, and then they hit it. All right, these subsequent rotations up, you're not finding a lot of volume, building a little more up here at 490. But that whole 488 to 489 was pretty anemic. All right, and again, a jobs number is going to just throw this all out of whack anyway. You got 1 minute. 1 minute until the jolts. All right, again, some divergence here. Some buyers stepping in, absorbing the sells, trying to hold it up. About 30 seconds. Don't trade the news. Let the volatility die down. Let the fast rotations and the quick volume adds happen, and then we'll look to engage the market. Based off this structure, I do like shorts. You do have some buyers stepping in, but we're kind of up in an area where sellers have also stepped in, and you're kind of far away from the value area. So it's harder for the buyers to hold. All right, now you got the jolts number out. Again, the initial rotations and the volume being added. Okay, what ideally we want to see, we want to rotate up towards the high for a short. We want to rotate up the high, not be able to add the volume. You want to see flashes of divergence on the sell side. I'm going to zoom in a little bit here. Oh, this also needs to be much wider. I forgot to change that too. It's like 560. Yep, there we go. Much easier to read when it's wider like this. All right, because my eyes are generally focused on this. I'll look to this if these numbers get too high and it's hard for me to read how much is being added per contract, but my general area of focus is here on the histogram, right? These rotations, how fast are we rotating? How many contracts are we adding per the rotations? All right, this is pretty good acceptance up here at the highs. Not really seeing a slowdown that I would like to trade just yet. You're getting flashes of divergence. That's a bonus. 467, 480, 490, 490, 517. All right, probably still adding too much volume here to consider a short. We're not there yet. All right, let's get some more rotations higher. Let's see what the volume build up here around 496 is. All right. Like, as much as we want to trade on just one element of our plan, you got to have all the elements, and we're just not there yet. You got flashes of divergence, right? Sellers are present. They're willing to absorb the buyers, but there's still too much interest up here at the highs. And each one of these rotations up, you're still adding too much volume. All right, you're kind of holding right here. All right, and then you just added some contracts at 495, 90, 720. Not willing to short just yet. I like the way the distribution looks. All right, a great target right now for any short is going to be around 480. Right, your first take profit will be maybe 486, and then further profits down at 480. All right, or this area right here. There's liquidity there. We didn't rotate enough through it to find out. All right, let's see what happens when we rotate up to 494 and 495 and see if we're still getting the volume being added. All right, on those subsequent rotations up that you just had, like, yeah, you had some pretty decent volume build, but now you're losing it a little bit. All right, so let's put it in an order. 4. Yeah, I mean, you're still probably getting too much volume being built here. 494 and a quarter. Yeah. So you got to keep an eye on this histogram. You know, if we miss it, we miss it. I mean, we just had too much volume to just build right there. And that could just be shorts coming in. All right, again, good volume being added down here, 487. All right, rotating back up. All right, the market's trying to find these areas of liquidity. We didn't get many rotations in here, but on this rotation down, that was a good volume add. All right, if you're entertaining shorts right now up here in the 495 area, this is kind of what you would like to see down here, right? The rotational speed's picking up. Every time we rotate between ticks, like you're adding a good amount of volume. That's what you want to see down in your target area, right? But now the question is, can we actually rotate back up towards 495 to give us an entry? Ideally, I don't want to engage below like 494. I want to stop outside of the range. All right, and I generally use a 5-point stop, so 495 be 499, right? We'll be outside the range on a 494 entry. I don't know if price is going to get back up there though, and we seem to be struggling rotating higher right now. All right, and you got sellers stepping in still. 492. I mean, we're not there. I want rotations higher. Like I'm almost willing to engage here at 492 because you just see price just struggling to rotate higher. All right, it's not adding a ton of volume when it does. Right, and this is such a sweet spot down here at 480. So let's put in an order at 492. We'll stop it at 497. Okay. Let's see if we get a fill. I just don't think we're going to get back up into 295. I really don't. All right, and we'll be short if we get a fill. We're not chasing this. If it breaks down, it breaks down. All right, if it gets down here, this trade is absolutely cooked. All right, because that's our target area. If price reaches our target before our fill, no sense in just waiting for the market to come back up. All right, yeah, it doesn't look good for a fill right now, folks. Does not look good. All right, the market is rotating down. It's finding some volume. The sellers are willing to step in. Yeah, I think we were just a little too patient on that one. We did have the slowdown, but at this 494, when we saw those rotations up into 494, it was able to build volume. All right, so let's just cancel for now. Take the limit orders off at 492. All right. We'll just be patient and we'll wait. Just filling in some generic details on my trade log. And we'll wait for the specifics when the market gives us what we're looking for, but it's not giving us what we're looking for just yet. We would like, ideally, for this market to rotate back up, fill in some volume here, test back up here, fail to do so, fail to add volume and rotate. All right, are we willing to take a trade here too on failed rotations higher? I mean, probably, yeah. Again, this is going to be such a sweet area to fill in down here in this value area. And you're just, the sellers are continually stepping in here. We're facing divergences all the way down. All right, and you want to trade out of value. So if we get out of value and the rotations are pretty slow up here at 486, I think we can try it with the hope that it doesn't get back up above 490, above this low volume area. Like this type of trading, you have to be extraordinarily patient, but when you get the opportunity, you have to be decisive. So we tried a limit order at 492. We didn't get the fill. Market has moved down to kind of our target area. We'll see if it rotates back up and see what happens. All right, we got to wait for the rotations up though. We're not chasing this down. All right, you got some buyers stepping in here in value. I got to imagine this market is going to struggle to get back outside of value, but you need to let it test outside of value again to see what happens. I mean, that's just the hypothesis right now. I need to actually see it. This is good volume building here. Yep. This is exactly what you wanted for the shorts, right? You're getting good volume being built around 480. That's what you like in low volume areas within value. Quick rotations, lots of volume being built, right? You don't want these areas to hold, all right? But now we need a rotation back outside of value to take our trade. All right, it doesn't have to be pure anemia for us to enter our trade, but we definitely need slow down rotations and slow volume builds to consider it. And we need to be out of value, right? I have left my mouse here up above 485. That's about where I'd be willing to engage this market. We found plenty of acceptance down at 480. There's plenty of liquidity there. That's a great target. The market will move back into there. And again, look at the sellers stepping in. They're stepping in at lower and lower prices because they don't think that price is going to get much higher. Right? The sellers jump in when they think they're getting a fair price. And it's right at the top of value. All right, still getting pretty decent, good rotations here. Yeah, seeing good volume builds. All right, you're going to test this 478 area. There's plenty of volume here at 479. There's probably some at 478. Rotation slow on the way up. All right, this is, again, looks to be a shorting market again. Getting much more divergence on the sell side than you are on the buy side. Sellers step in when prices rise. But we want to get outside of value. I'm not going to just blindly put a limit order at 485 right now in hopes that it gets outside of value and then gives us our trade. I need to see the slowed down rotation, the slow volume build outside of value for me to take the trade. All right. So let's see what happens here. Buyers stepping in the slow volume area within value, but it's within value, so we don't wait as much as we did when we're outside of value. Those are the divergences that really matter. All right, these buyers are going to get snapped. There's too much volume being built in the area that they're trying to defend. Prices are being accepted. So if we get a good rotation outside of value here in the 485, so you see the slowdown, we see a flash of a divergence or something, we want to be in that trade. But let it happen, let it come to you. Don't chase it. Okay. Pretty good volume builds. Okay, now let's see on subsequent rotations. Are you still getting the volume build? Yeah, you're still kind of getting the volume build up here. That's not what you wanted to see for a short. Okay, now you're screwed, right? Because now the POC is now shifted into the area in which you were considering a trade. Now you can't consider it because now you're within value, right? So now we're saying that this area right here is going to be a great area for liquidity. Yeah. I mean, the market is the average price that the market is trading is up here now, right? That's what the value area is. 60%, 68% of all the contracts traded are now within this range. All right, so what do we need for a short? We now need to visit 498. All right, so now we just made commentary on the rotations and what we're seeing, but we're not really willing to engage 485 anymore. Not at all. All right, because around the POC, price is just going to fluctuate. It's going to move up and find some sellers. It's going to move down below the POC, find some buyers, and then price will just fill in until the auction completes. And then price will move away from this area. So right now it's just moving back and forth, looking for that liquidity. There's nothing we can do right now. You gotta be patient and let the market give us what we're looking for, and this is not it. All right, these are pretty slowed rotations around here. Doesn't seem to really pick up on downward rotations. Oh, no trade environment just yet. Let's just be patient. Pretty normalized distribution looking shape, especially here between 480 and 495. You do not trade at POCs, right? Because the market can just move in either direction. Even if you get to slow down the rotations and it looks like the auction is completed, I mean, flip a coin as to which direction it's going to go, though, right? Because they won't know until the first large buyer or the first large seller steps in and moves the market. So right now you're looking at just a coin flip trade. You don't trade coin flips. That's what candlesticks are for. Candlesticks are always a coin flip. I do not trade coin flips. So we just patiently wait. We're gonna bounce around here in value. Yeah, it gets a little bit boring when it does this. But good trading is boring trading. You're waiting for the market to give you the entry that you're looking for. Do not chase. Don't impose your will. Everyone wants to make money every single day, but if the market's not offering you the trade to do so, you got to sit on your hands or cross your arms. I cross my arms. I don't sit on my hands. So just slow. Just rotationally, we're slow. Auctions, it's going back and forth. It's calling. This is the last call right here. Find out if anyone wants to do business here before price moves away. I mean, yeah, decent volume here. Build at 486 up in here on these rotations. You probably go back up there, right? You see the structure now. You start to see the edge of this curve right here. You're probably going to fill this in a little bit. Will prices revisit the highs? I don't know. I hope so. If we're really in the mood for a short, we're going to need to revisit the highs and extend this distribution range and the out of value range, because right now there's just no room in which to trade. I do not like to trade within value. It greatly reduces the probability of success. But there's absolutely nothing to do right now. Just cross your arms and wait. Do not engage. feel like my spreadsheet's miscalculating something. Off by a dollar. I'm getting good rotations here around 478. All right, that's pretty good rotations, building value. Market accepts this area. All right, this is not a trend day. It's not it. This is just a normal distribution, another type of balance day, price discovery. We're just kind of fishing around, looking for the value. All right, this was pretty good value built down here. All right, you got a lot of volume built with not many rotations, so prices are acceptable here. All right, so if we want to short down to this area later, looks like a decent area to target. If market had rotated down here slowly, it would not have been a good area to target later. All right, you keep getting the flashes of divergence here on the buy side. So, but again, you're within value. You're right at the PLC. This is to be expected. I would imagine if you drifted up towards 485, 486, you're going to get flashes of divergence on the sell side. That's very typical all around the POC and the mean, the distribution. We'll get absorption on both sides, and it means nothing. You can't read into it when it's within value. So the ideal scenario right now is exploration outside of value. right? If price comes up here to 496, 495, this area, and we can extend the distribution a little bit, volume drops off a cliff, rotation slow, you get the flashes of divergence on the sell side, bam, you hit it. Anything outside of that right now, not interested. All right, just because the market's moving doesn't mean we need to trade with it. There's a lot of randomness within markets. And if you trade candlesticks, you'll be trading every single random movement. That's why we don't trade candlesticks, because they're made for retail traders, not the professionals. Okay, good. Moving higher. And again, we had good rotations here around 488. You had good rotations down here at 478. So let's hope the market rotates up towards 495, gets outside of value a little bit, tests outside, doesn't find what it's looking for, and then we'll fade it. All right, we already know what we're looking for. Now let's trade the plan if we can get it. Still not a whole lot going on here. We're still within value. We're just bouncing around within value. Trying to fill in all the areas of liquidity. All right, looking at the TPO chart, the top of the range looks much smoother relative to the bottom. Like this whole area in 475, 465, you might do some additional business down there. But we're starting to look pretty clean up here near the highs. All right, and cleanliness of a distribution just represents completed auction. All right, you move back down towards value. We lost a little interest up in the 490s. Not a tradable area. We're still within value, and the POC is way too close for the risk reward. There's nothing to do. Sit and wait. Sit and wait. Just watch it unfold. Nothing to do. Just rotating around the POC. This is the mark doing its Bueller. Bueller, are you here? Hello, anyone? Does anyone want to transact here after we've rotated in this area so many times? Are you sure? Anyone? And then once it doesn't find anyone for an extended period of time, it moves. The market will move away. All right, you had slower rotations up at 490, but it's not a tradable area. It didn't have all the criterion that we needed. All right, finding good volume here at 478, just like I had said. All right, this is a low volume area within value. You're likely to see some quick rotations and good volume builds once you rotate into these areas. Flashes of divergence, but again, within value. Don't want to read too much into it. Just be patient and wait. We already know what our game plan is. We're letting the market dictate the types of trades that we're looking for, not imposing our will upon this. We want to make money today, but the market doesn't give us the opportunity. The market doesn't give us the opportunity. It's as simple as that. So we're just going to be patient. We're just going to wait. Patient and waiting. So many people trading candlesticks. It is so bad. Oh my God, just all coin flipping. You're all coin flipping. There's nothing but candlesticks, candlesticks, candlesticks. Okay, moving, rotating higher. Ooh, getting more enticing. Just rotating that low volume area, building up some volume. Nothing to do yet. We're trying to wait for price to migrate up towards his highs. Again, I apologize for trucks and cars moving behind me, but I have my window open. It's a nice day. I don't want it to get super hot in here. So many. And rotating up towards the highs. You're getting a lot slower. So we're definitely getting within the area that we want to take a trade, but we're just not there yet. All right, we really want to go outside of value if we can. All right, rotationally, you're adding a lot more on the way down than you are on the way up. That's a good sign for the shorts. This is not really an area you want to get long at. Be patient and wait. Rotation, this is so slow right here. We're too close to the PLC to take this trade, and the fact that we're still in value right now is very discouraging. Am I willing to engage maybe up at 493, 494? Yeah, probably if you still get the slow rotations up there, right? But we need to create some distance away from the PLC and away from the mean to give us that good risk reward ratio on the trade. We don't trade 1-to-1 situations. I want at least 2-to-1. But I mean, rotationally, you're pretty slow here. So let's see what happens when we get up near 491 again. And if you take a trade at 491, your stop is still going to be within the range of the distribution, which isn't ideal. So we want rotations higher. But this has been an area where sellers have stepped in all morning. Right up here in this 4,900, or not 4,900, 490 range. It's just you want to pull the trigger so freaking bad, kind of here, right? Because this is slow. You're not adding a lot of contracts here. You add a little something something, and then you see the flashes of divergence, right? Sellers are still willing to step in here. So let's see if we can rotate up to at least like 492. All right, where are these swing highs at? 492s, with the highs being at 497. Got a little juice in there. It's not getting it. Do we want to put a trade at 491 and give it a shot? I think we do. I don't think we'll get filled though. Stop at 496. Limit at 491. Stop at 496. Yeah, we're in value, but this market is just struggling to get up here. The struggle is real, folks. So let's see if we get a fill. And then we'll put in, yeah, all right, we're filled, 6491. Stop loss is going to be 6496. Take profit for this one is going to be 477. Yeah, we're trading through the PLC, but it was pretty, and we are going to get stopped. 6477. We were in the trade at 1028. Okay. So we were in value. I need to mark that. We're trading towards the POC. Are we getting divergence at the very moment? No, we are not. All right, so there's two less than ideal factors here. One that we traded within value. One, we're not getting the flashes of the divergence. Okay. But we got to let this trade play out a little bit. So we'll put our buy in at 477. And we'll see what happens if the market rotates down. With an entry at 491 and target 477. Let's go to break even at 485 if we get there, but we're getting flashes of divergence on the buy side. We might get stepped out here, right? Because now we're in like the area where we really would have preferred to take the trade up at 494, right? We're talking about that, but the market was just struggling here at 490, and the rotations were so slow. So, I mean, it looks like the market's going to break down here. But I mean, there's a buyer here. Someone's buying here, trying to hold it up. Our stop's at 496 up here. Flashes of divergence on the sell side. I'm still kind of anemic up here. I mean, rotationally, we're still probably rotating a little too fast. But let's just let this play out. There's no reason to do anything. Rotationally, we're still kind of slow up here. We're not adding a ton of volume. We had good volume build down here, so I think the market is more likely to visit down here than it is visit up here. And that's the trade, right? We're trading with the probabilities. Again, at 485, we'll move to break even at 490.75, one tick below our entry. But we need to get down to 485 to do that. All right, so that's the plan. We're not going to adjust anything if we get above our entry. All right. We want to see the market come to this area and start rotating very fast and add a lot of volume. You don't want it to get hung up on this ledge right here. All right, we want it to break down and add lots of volume here. So let's see if the market can do it again. Flashes the divergence, but they're not holding it yet. All right, rotationally, we're kind of slow here. We want the volume to pick up. We're slightly below our entry at 491. Again, we're looking to take it down to 477. We'll move our stop at 485. We're in at 491. The stop's at 496. All right, we traded a little bit inside value, but again, the rotations were slow. We're in an area of previous resistance, at least in terms of seller pressure. Okay, not bad. We want this to be speeding up though. All right, the best trades are going to move really fast. We're going to get a lot of rotations with a lot of volume build. I am not moving my stop until we hit 485. At 485, I will move it to 490.75 for one tick. Okay. We're only about 3 points in profit right now. It's not enough to move my stop based on this risk reward. Yeah, we're trading through the POC. Less than ideal also. Okay, did we hit 485? No, we did not. All right, but we do see sellers at least trying to hold it down. All right, stop remains at 496. At 485, we move our stop. So I'm going to put my mouse right at 485. And we cross that line, I will move my stop. Otherwise, we do nothing. We're not taking risk off the table just yet, right? Because price can easily rotate into the 492s and 493s again. But I am slightly comforted by the fact that when these rotations up, you're just not adding a ton of volume. You're adding more on the rotations down than you are on the way up. Trying to trade through the mean, which reduces our probabilities. We still have greater than 50% chance of success here. but we reduced it when we traded one in value, two we're trying to trade through the POC. And did you really have holding divergence on the sell side? No, you didn't, right? And buyers continually try to step in here and hold up price. But the top of this distribution looks pretty clean. If you look at the TPO chart, it looks pretty clean. I mean, yeah, you could absolutely have a breakout to the upside to find that liquidity, but I mean, I think the probabilities now are stacked towards you want to be short. Okay, market rotating up towards our entry. It found some limit orders on subsequent rotations. Not finding a ton, right? It can still drift up to our stop though. I mean, very easily. If you get stopped out, you get stopped out. Nothing you can do about that. Right? We reduce the probabilities of our trade a little bit. Yeah. So rotating higher, you're finding some volume here. Nothing to do. Right? The only thing that we're going to do is move our stop if we get down to 485. Our entry is at 491, our stop's at 496. We're looking for 477 on the take profit, right? But ideally, is this the market behavior that you want for this? No. I mean, yeah, you're slow on the rotations up, but you're also pretty slow on the rotations down. Like down here, you want to see the market pick up in speed and start filling this in, right? Because then that lends to the notion that it's willing to visit this low volume area here and fill in the volume here, which it did earlier. On the rotations down, it added good volume before it left that area. So we're just being patient. We're gonna cross our arms and just wait. I'll again put my mouse on 485 where we want to move our stop. The price gets down there at 485, we'll move the stop. Entry is still at 491. Didn't add. We're not going to add, I don't think, on this one. I definitely don't add if we're looking at a loss. Right? If it gets above our entry and I see slowdowns at 493, I'm not going to add to it. Buyers are still willing to step in here at 488 and try to hold up the market. You're at the top of the range. You're still within value. So it shouldn't mean much, right? Build up some speed and faster rotations. That's what you're really looking for, right? You want this. And you see how you're not really getting that? All right, you see how slow the volume build is here? So just maybe, because we now have seen that it's not so great up here at 493, it's not so great here at 488. Hey, market, you know where it might be good? 477. Why don't you go test down there and let me know? All right, so we got 46. Again, 485. We got to stick to what our rule set is. We're not going to move that stop unless it hits 485. I don't care if it's 485 and a quarter. If it doesn't hit 485, I'm not moving the gosh darn stop. I try to keep my language polite, but I still didn't get it. As soon as it hits 485 and a quarter, like, do you want to move the stop now? Yeah, you do. Yeah, you do. But we're not going to because you didn't get the 485 that we said. But you're still on the rotations up, so that's not bad. All right, you're seeing at least part of what you want to see. Get the flashes of divergence. Okay, I think we're going to move through the POC. I think there's a higher chance of success now. Okay, all right, so we hit the 485. Stop gets moved to 490.75. Okay, so I'm going to put in 6490.75. That was my temporary stop. Okay, we're rotating down. I will move the stop again at 480 to 485. We rotate into 480, I will move my stop down to 485 to start protecting profits. We got to rotate into 480 though. Okay, so now stops at 485. Okay, 6480 point, no, 6485. And no change. All right, we rotate to 478 and moves to 82. Okay, stops now at 482. All right, because we're now in our target area, so we're willing to take profits anywhere in here. We'll get filled for sure. All right, stop down to 481. We're just tightening. As we get closer and closer to our target, okay, and we're out at 481. We're good. Good trade. That played out pretty well. We didn't have a ton of drawdown in that trade. We were out of the trade at 1038. We entered around 1028. It was a 10-minute trade. That's a much longer trade than I usually have. I mean, trades usually go pretty quickly. So we were in at, let's just recap this real quick. We were in at 1028, which was right here. Okay, on these rotations up, we got in at 491. So we had about a 3.5 point drawdown. All right, that was the most. On our 5 point stop, we had 3.5 points, kind of close against stop. And the market ended up kind of exactly where we said it was going to be, at the 477 area. As the market dropped, we started to protect our position, right? We move stop. As we get closer and closer and closer, we want to narrow that gap between the take profit and the stop. So any slight tick up, once we get near our take profit, we just get out of the trade, right? Like, as much as I love to get 477, 41's fine. Right, that's a 10-point trade. That's more than 2 to 1. We were targeting, if we do the math, a ratio of 2.8 to 1, and we actually got 2 to 1, right? So good profits for the day. We took that little hiccup in the morning right after the Chicago PMI, but we made up for it more than some with that short there. Okay, so now we're back in value. We're near the POC. We're filling in this 477. Like, there potentially could be a long down here in the 470s. But I mean, this is a lot of room to work with, right? We were willing to take the short up here at 491 because we didn't have that much room to the highs, right? We were still in value, okay? But this was a clean looking distribution. We were struggling to rotate higher and add volume on the upside. We traded into the POC that reduced our probabilities, and we didn't really get the good flashes of divergence that we were looking for at the highs. Okay. I do expect now the market just kind of rotate again around the POC, because we tested up here, we didn't find anything. Now we're going to rotate around the POC until we don't find anything, and then we'll rotate down and see if there's anything down here, because we've already rotated up to find that there was no one willing to take it higher. So now the question is, excuse me, after we rotated higher, found nothing, we're back at the POC, because we know this is an area of liquidity. We've always found liquidity here every time we've rotated into it. Once the volume starts to become lackluster here, we're going to test lower. Okay. Do we get all the way to the lows? I don't know. It looks pretty clean down here. We'll see. But again, we're stalling kind of a little bit at the POC. Is this a high probability trade? It's higher than 50% right now if you were short the POC and target out of value, but that's not really something I do. I really like to stack the probabilities in my favor. So ideally what I want to happen is us to test out of value, not find anything down here, and then we're going to trade it back up into value. Okay. All right, I'm going to take a quick restroom break. We got 20 minutes left in our trading session. We're in profit pretty good here. 1 loss, 1 win, but we're got about a 1 hour right now on the day. Not bad. We're willing to engage the market probably at least one more time if we get the opportunity, but because we're getting towards out of value here on the low side, I want to go use the restroom real quick, okay? All right, so what do we find here as we're rotating outside of, oh, it's pretty slow, huh? Yeah, pretty slow. But this is too wide of a value range for us just to be shorting just outside value here. Well, I mean, like, this is a lot of room. There's a lot of room to test down here to find volume. But again, in flashes of divergence, sellers are willing to carry this lower. So we'll see. This is not a long just because we're just outside of value and we're getting a little bit slow down the rotations. We're not there. We're building the case for a long, but we're definitely not there. And because you're getting the flashes of divergence on the sell side as we move lower, pretty low probability. All right, there's still pretty good rotations. Yeah. Let's see what happens as we move down towards the lows. All right, we've already nailed one good trade. That was shorting up at 6491, taking profits down at 6481. We targeted 477, but we tightened our stop really aggressively as we started moving towards our target, and that's how I like to trade. All right, I usually allow a 1 hour move before I move my stop to break even, and once I get that, and market continues towards like a 2 hour, 3 hour target, you start moving the stop aggressively. All right, still getting pretty decent rotations and volume build here. All right, my eyes are primarily move this up. Eyes are still primarily focused on this distribution here, right? Unless the numbers start getting too big, and then I'll start like kind of looking at this. But what we're really looking for is when the market rotates either up or down per tick, how much volume is being added? Is it a lot of volume? Is it a little bit of volume? Are we rotating very fast or are we rotating very slow? Right? When the market rotates very slow and adds very little volume per rotation, it's essentially saying it's a market saying to the people in that area, hey, last call. If you want to get in at this price, get in right now. We're not going to be here forever. Right? But when the market does this and adds a lot of volume, plenty of liquidity. You got time. Right? That's an area that'll be revisited until the volume dries up. The market stays in these areas until liquidity dries up, and then it'll move. I mean, you got a little flash of the buyer divergence down here at the 466. Sellers are flashing up at 471. See what happens. Right, because this isn't a trend in distribution. We don't trade partials looking for runners. This wasn't a distribution to look for a runner on. Right, trading through the POC, again, we reduced the probabilities of this trade. It was greater than 50%, sure. But was it stacked where I'm like just foaming at the mouth and drooling, waiting to get in? No, it was not. Right, we traded within value, less than ideal. We traded towards POC, which is good, but you don't want to trade through the POC necessarily. And still building some volume here, still rotating pretty good. All right, there's enough volume being added here. Market likes it. The market stays in the areas. So long as it gets the volume build, like, it'll stay here. There's no reason for it to run unless someone moves it. And then when you have an area of high liquidity where a lot of volume is transacted, it takes a lot of volume to move the market. It doesn't take much in low volume areas where participation is lacking. But when there's heavy participation, you need to be big in size to move the market. And that's very rare. Very rare. Again, I apologize if you're picking up the ambient noises behind me with, I think there's some sirens going off right now. The car is driving by. It's just because it's like 68 degrees out this morning in Michigan. It's very nice. I have my window open. Like, my office gets pretty hot if I close the door and have my computer, my monitors running and everything else. Like, it gets pretty toasty in here. So I like to either leave a door open or I'll leave a window open if I can. Rotationally, this is fine. This is accepted, right? You got this little dip in the volume around 465.5, right? Market seems willing to transact right here, so we're probably going to rotate a little bit in this area, fill it in. I mean, it's a pretty obvious dip in a distribution, right? We have high volume around 470, you have high volume around 460. So you would suspect that there's probably going to be some high volume around 65.5. The market's trying to find that out. But as you rotate it down just there, you're not really finding much. Is this a long back up towards the POC? Yeah, I mean, we're getting there again. This range, out of value range is too wide for me. Right, I don't want to trade up here at 467 just because rotations are slower when I know we haven't tested down here since the open, right? Yeah, this was done during the opening drive. All of this, right? So the market needs to retest this to make sure that all the liquidity is gone. If it is, you're going to come back up here into the 475s. But that's only the hypothesis at the moment. It's 10:48. We're running out of time to take any additional trades right now. I am willing to trade up to really like 10:55, but I don't want my trades carrying after past 11 o'clock. There's just personal preference. You got 2 kids to raise, got to make lunches and stuff. So I have other priorities. I would love to sit here all day and just read the markets. I freaking love this. Been doing this for almost like 20 years now. I love it. I would not ever spend any other day other than doing this. Never retiring. Not going to happen. I'm going to do this until the day I die. So long as I'm cognitively all there. Right? A lot of things could go wrong, but we'll see. And we still have a fairly large gap between yesterday's cash session and today's cash session. Right? It shows that the market's closed around 6,390. Well, I mean, in terms of the range, but from the close, I mean, we've already touched the top of the range from yesterday. Right? That's, I think, where we opened. Yeah, we opened right in the top of yesterday's range. All right, again, flashes of the divergence. We're filling in. Like, let's see what happens around 454 down here. Right? Buyer stepping in a little bit, but I want us to rotate lower. Right? I want to get my stop as close to the edge of this distribution as we possibly can. It's the highest probabilities. Right? Stack the probabilities in your favor. Do you need everything? Right? If you made a list of all the criteria you need for a trade, do you need every single criterion to hit? No. Is it ideal? Yes. But if you waited for all those checkboxes to be checked, you might never be taking a trade. You might not ever get all those things to align. And just to recap, what are you looking for? You want added value. You want slowed rotations. You want slow volume builds. You want divergence on your side. You want to trade back towards value. Okay. You don't necessarily want to be trading through the POC. You want to try to avoid that. All right. That's about like 6 things I can think of right off the top of my head that I would ideally like to have to place a trade. Right. But some of this becomes a read. Like we took a trade inside of value today because the value range was so close to the edge and rotations were slowed down so much. Like I could not take that trade. And plus we were in an area of previous divergence. Like, are you never going to take a trade? Right? When you have odds in your favor, right? We're looking for 2-1. The odds were in our favor. There's a positive expectancy of placing that trade. That's what you're looking for, is a positive expectancy. Right? And if you haven't done so, if you really want to understand the mathematics of markets and probabilities, play poker. Go read some poker books. Like I may have learned more from poker books than I ever did from actually reading trading books. And I've read every single fucking trading book. And I've read also every single fucking poker book. But like the math in your head is easier to conceptualize with cards, I think it is, over this. Right? Because you know the probabilities of the cards. There's only a limited number of cards in a deck. Right? You know what the odds are when you have pocket aces going pre-flop, going all in. The odds are in your favor. You always want to take that. You always want to go all in if you can, pre-flop with pocket aces. Because the odds are you beat every single other combination of hands. My wife is sending me pictures of Pokemon on the cover of Time magazine. Great. My kids and I, we collect Pokemon cards, and while the latest hype has been good for Pokemon, All right, so what are we seeing here? All right, we're getting the slowed rotations. All right, getting a little too much volume being built here at the lows. I got to imagine with the amount of volume we're building here, you're still getting flashes of the seller divergence that you're gonna push these lows a little bit. And let's see how far you can push them. All right, so what are we looking for? Right, what is it? We're looking for the slowed rotations. Do we have that yet? Borderline. Minimum volume build on per rotation. Do you have that? No. That's a definite no. Are you out of value? Yes. Would you be trading back towards the POC? Yes. And trading back towards value? Yes. Do you have good targeting? Yes. That whole area up at 475? Yeah, I like that area. Every time we've gone into that area, we've built some good volume. I think it may be revisited again today. But with the way the market has been looking over these last few days, where it's just been hammered by sellers, right? You have divergence here on the sell side at the lows. The sellers are willing to step in because, again, they don't think they're going to get better prices. So that's why you step in lower if you're a seller. You're not holding a position. It's the thought that you're not going to be able to get a better average price on your fills. So are we going to get long here? No. There's just too much against us right now for us to consider this trade. We're in an area that we would like to take a trade and consider a trade, but all the elements of a high profitable trade, high probability trade are not there. Let's wait. I don't care if it shoots up without us. I've seen enough here at these lows where I'm not interested in taking a trade right now. I don't care that we're in profit for the day. It does not matter. What previously happened is irrelevant to what is going to happen. Right, just because you won with pocket aces on the last all in doesn't mean you're going to win again. But also doesn't mean you're going to lose. It's irrelevant. Okay, you're getting pretty good volume build here at the lows. Per subsequent rotation, you're still adding a good amount of volume here. All right, and so it's now 10:55. We have really a time cap to be placing a trade today, so we're not really going to be placing any more trades, but we'll stick around for another 5 minutes just to see kind of what happens. And unless it's like so overwhelming, I still hear lots of sirens. Fire truck. Medical emergency, I'm sure. Firemen don't really put out fires these days. They respond to elderly medical calls and overdoses. They shouldn't call them firemen anymore. Call them paramedics with big trucks who occasionally fight fires and get cats out of trees. So, I mean, is this going to break down? It doesn't look like it. It does not look like this range is going to break down. You're going to gradually add to it, right, as you rotate it down. We didn't. What happens before a breakdown is the market rotates very fast and adds a lot of volume at the edge before it breaks. Did you get that? No. So it does. I don't think you're gonna and just drop off a cliff here at the lows. It doesn't look like it's gonna happen. Are you gonna revert back to value and the mean and the POC for the day? Probably not gonna do that either. Because there's no flashes of buyer divergence down here. You're still getting flashes of seller divergence. Rotations haven't slowed enough. I mean, they're getting slow, right? You're getting pretty slow here at the lows. You're not adding a ton of volume per contract. Look at this. You're just not there. But I have not seen any flashes of divergence on the buy side. Or you still get occasional flash on the sell side. These areas up here, 465, 475, are still great targets. I'm not going to engage it because we're too close to 11 o'clock right now. You're getting these flashes of the seller divergence here. You don't necessarily want to trade into that. Does that preclude you from a trade? No, but it's not helpful. All right, you want the divergence at your back. You want the wind at your back for good sailing. 596. You see, you're still adding a little too much here. You're going to extend this range a little bit. All right. The market's not done down here. It's still finding participation. So the market will hang out down here until everyone dries up. Is there a part of me that wants to take a trade? Yeah, but I think that's more out of greed than it is out of probabilities. We're out of value. Yes, have rotations slowed enough for a trade? Probably now you get the flashes of the divergence. 160 to 190 to 220. Like rotationally, you're pretty slow down here. I'm tempted, but again, 1058. I have to oblige by the hard stop at 11. Just because of personal stuff with the kids and such. But also, you got to understand cognitively, to be this hard focused and on markets, to be watching all the ticks, all of the volume being built. Like literally, I do not take my eyes off this distribution screen, this footprint chart, like ever. Like I just constantly watch it, constantly watch it. You can only do that for an hour and a half, about 90 minutes. It's what every study shows. That after 90 minutes of intense focus, your brain just craps out. Right? You're gonna make so many mistakes. Right? You're getting better rotations up here. Right? You kind of made it through the area of divergence. I would like to see 457 and volume being built here and being accepted. It's on the reason for rotations down. It's still kind of slow, right? I don't see a breakdown right here. Not yet. We haven't built enough volume here at the lows to break down price. We have almost all the elements for long, but we're constrained by the time element. It's now 10:59. Got 15 seconds until 11 o'clock. So we can't really take a trade anyway, because the last 20 minutes, and I'm really screwing myself in the rest of my day if I do that. Right? Have a very defined narrow window, 90 minutes that you trade. Whatever part of the day you want to do it, just stick to the same 90 minutes and only trade for 90 minutes. You're sitting here all day, you'll never be profitable. Your brain cannot just handle that cognitive load. It just cannot. Right? You can think you're Superman or whatever else, but cognitively you'll break down after 90 minutes. After 90 minutes, your brain starts to turn to mush and pour out your ears. All right, see, you're getting the good volume build in the 457s, right? We saw the slowed down rotations down here. We were kind of tempted to take a trade, but we didn't, right? We're worried about time. Okay. We're worried maybe a little bit about this rotation here at the low, but you're getting pretty good rotations up here. You're not seeing the flashes of the seller divergence again just yet. Like ideally, your target's up here in 473, back in value. But the market might spend some time in here and try to clean this up. All right, there still might be some participants hiding in the weeds waiting for you. But anyway, I think that will conclude our trading session for the day. It was a profitable day. We made 1R because we had that one bad trade right after the Chicago PMI numbers. We thought the highs were in, and they were not. We were close to the highs, but they were not in. And that trade was at 949, and we shorted at 6475. And then we got stopped out at 6480. Our second trade, we shorted at 1030, 1028, and we shorted 6491 with their stop loss at 6496 and got out at 6481, and we were targeting 6477. So good day. Good day. Any day that it's a win is good, but we really, really judge our days on process. Did we do what we set out to do? And I think we did. All right, we saw on that second trade prices just failing to rotate above 491 and 493, and here you go. It's getting up into this area, folks. Like this is not complicated. Reading markets is the easiest part of trading, right? It's the trade management, and sticking to your plan is the hardest part. It's the discipline. Reading this, I can read this all gosh darn day, right? I can call out pretty much almost all the price movements, right? But if trading it, it's the hard part. Right? Having the confidence in your reads to place those trades, having the guts to stick with it, sticking to your plan, right? We had said we're not moving our stop unless it rotates down through 485, and it rotated down to 485 and a quarter. Did we move our stop? No, because we said 485, not 485 and a quarter. right? As soon as you start moving it 1 tick above, you'll be willing to move it 2 ticks above, 3 ticks above, a point above. Like, you start destroying your management. And that's probably the more important part. Reading this market is so easy. Reading S&Ps at this point is pretty easy for me. It's the trade management, it's trading it. That's always difficult. And it should be difficult for you as well, right? Because there's a lot of emotions go into this. There's a lot of confidence issues that go into this. Am I benefited by that I've done this for so long? Yes. Am I also benefited that I don't trade fucking candlesticks? Yes. My God, people, you will forever be a break-even trader if you trade candlesticks. You will never be profitable. You just will not, right? Your brain will constantly find patterns that just do not exist, right? You'll find a pattern, you'll flip the coin, you'll land heads a few times, and you're like, oh yeah, this is good. But then you start flipping tails repeatedly, right? Because you're trading with a coin flip edge. And that just adds to emotional damage, right? You just saps all of your confidence when you do that. Do not trade candlesticks. The moment you get away from the candlesticks, the moment all your trading will change. Okay, will it make you an instantly profitable trader overnight once you get over to distributions and order flow and start really understanding what the mechanics of the market are? It's not going to make you profitable overnight, but it's going to help. You're drastically going to increase the probabilities of you being successful at trading once you get away from the candlesticks, right? This is the inner plumbings of the market. This is how the markets move. Okay, it's the bid and the offer. If the offer clears and there's people willing to buy, the market ticks up. Okay, if you're selling and no one is bidding, the market ticks down. That's it. That's all there is to this. And you can monitor all that with order flow and distributions. Right, this is the inner plumbing of the market. There's no other information you can get from the market that's greater than this, right? You narrow your focus to the inner plumbing of the market and ignore everything else. Okay. All right. We'll end with that rant. I hope you all have a great Tuesday. God bless you and your families. I will be back tomorrow morning, Wednesday morning, probably about a few minutes early. Right. I don't trade really until 9:45 anyway. So the first 15 minutes is monitoring the opening drive and opening auction, see what kind of develops, and then taking it from there. So I don't really need to get on too far in advance of 9:30 because there's not going to be anything to do right at 9:30 other than discuss kind of what we're seeing, what the news events for the day is, yada yada yada. So, all right. All right, adios everyone. Have a great day and we'll catch you tomorrow hopefully. All right, bye-bye.